This is problem 612. Uh, the calculating EAC, or equivalent annual cost. You're evaluating two different silicon wafer milling machines. Techron 1 costs $265,000, has a 3-year life. Pre-tax operating costs $41,000 per year. Techron 2 costs $330,000, has a 5-year life, has pre-tax operating cost of $52,000 a year. Both milling machines use straight line depreciation over the project's life and assume a salvage value of $25,000. If your tax rate is 21% and your discount rate is 9%, compute the EAC for both machines. Which do you prefer? So I've set up a spreadsheet over here. I've got both the projects set up and entered. So we got $265,000 for Techron 1 and then $330,000 for Techron 2. I've entered the discount rates and the tax rate. So there are no sales here, but the operating costs for Techron 1 are, I believe, $41,000. Just double check that, and then 52,000. We'll go ahead and enter the 52,000 over here. Or so I've got the 3 years for Techron 1 and the 5 years for Techron 2. So depreciation is just straight line. So this is, we just take, let's do a negative because we want it to be a positive number. So negative 265,000 divided by 3. So that's $8,333. So I'm just going to drag these across. So this is, I've got my operating costs don't change. My depreciation doesn't change either. So I can actually copy that down. So now I have my earnings before taxes. So now to calculate my taxes, I just take equals, and I take the tax rate, and on my computer it's function F4. It may be just F4 on your computer depending on the setup, but FN F4, and then times the EBT. So that's actually a reduction in taxes. So now I can drag this across. So now I've recreated all my project cash flows. This is OCF. It's actually kind of misstated. This is the OCF. It's right now it's EBT plus depreciation minus taxes is the calculation. Then I have it set up to add in the salvage value after I calculate that. So salvage value 25,000. So both of them are 25,000. So this is just, we take the 25,000 and we multiply it by 1 minus the tax rate, which is 21%. So the after-tax salvage value is 19,750. So I just come over here and it equals, and I pull from the after-tax salvage value. So now I have have all my cash flows for Techron 1. So equals NPV, and the rate is the 9%, and comma. Now I just enter my values. Remember, in NPV, you do not, the initial cash flow is outside the calculation. Close the parentheses, and then we add back the initial cost. So that's $284,782. Now the EAC, all we're doing is calculating a payment. So equals PMT. So this is Excel's payment function. So the rate is the 9%, and then number of period is 3. So 3, and then present value is the NPV, and we close that. So it's going to come out as a positive number. So the EAC here is $112,504.68. So now let's go over to Techron 2. So equals, we put in our operating costs already. We can actually just pull this across and just do this. Now our depreciation, so minus the $330,000, in this case is divided by 5, that's the number of years. Divided by 5, so $66,000 a year. So now I have my all my cash flows. Now just I've already calculated salvage value, but I can do it again over here. So equals the 25,000 times 1 minus the tax rate. So this gives you the value that you're going to receive, because you're going to owe that difference. The 25,000 minus the 1970 is going to be your actual the taxes that you would pay on that, because you fully depreciated that this piece of equipment. So, all right. So NPV equals NPV. Okay. So rate's the 9%, comma. The values are these values right here after the initial cost, and we add back the initial cost. You get NPV. So now we're going to calculate the equivalent annual cost. So we're just calculating a payment, then rate, and the 9%. Number of periods here is 5, and then comma, and then calculating the payment based on the NPV. So we're what the equivalent annual cost does is allows us to compare products that are of different lengths. So here we have go back one space there. So the equivalent annual cost for Techron 1 is $112,504. It's actually less for Techron 2, $108,760. So we would prefer Techron 2 because it costs us less. So